Let me ask you something. Do you want to enjoy your retirement without having to worry about outliving your money? Of course, but we can do better than that. We're not here to simply maintain our lifestyle in retirement. Investing in SCHD will elevate your purchasing power every passing year. You worked way too hard to live a restricted lifestyle in retirement. I think it is the best ETF out there when it comes to the trifecta of dividend stats. And we're talking dividend yield, dividend growth rate, and of course, the ever important total returns. SCHD may not maximize your wealth like the best growth ETFs, but it certainly makes that bet a lot more comfortable every night in all markets. It's the ultimate floor stabilizer for any portfolio. And stay tuned if you want those dividends flowing and growing forever. In this video, we'll quickly cover the basics of SCHD, and then we'll hop over to my screen to add another year to our Retire on SCHD scenario. I will provide an annual update for many years to come to prove that this flat out dominates bonds when it comes to cash flow over the long run. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please poke that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. Quick shout out to my Seeking Alpha affiliate link. Check it out if you or a friend are interested in trying Seeking Alpha Premium for free. Using the link does support my channel, but more importantly, it saves you money on what I genuinely consider the best resource on the internet for this investing stuff. I've mentioned this in the past, but I personally have used many YouTubers' links for Seeking Alpha Premium over the years. And if you're on the fence, I highly recommend waiting for one of those juicy holiday sales. You know what time it is. Let's grow. SCHD Basics and Methodology. SCHD is the Schwab US Dividend Equity ETF. Its primary objective is to focus on companies with sustainable dividend payments. It's important to note for all the keyboard warriors among us that I did not say that its purpose was to outperform VGT, Bitcoin, or the market. SCHD holds 100 companies weighted by market cap, and it excludes REITs, which I love because it pays 100% qualified dividends. Its cash flow receives the same favorable tax treatment as long-term capital gains for all you 4% rule users out there. SCHD begins its process by screening for companies that have paid a dividend for at least 10 consecutive years. In this first single criterion eliminates 90% of the stock universe. The second and third screeners check for companies with a market cap of at least $500 million and a daily trading volume of at least $2 million, respectively. This gives me the warm and fuzzy that SCHD isn't going anywhere because it filters out small cap stocks with low trading volume that come with additional risk. We're not done screening quite yet. Next is the part that most SCHD followers don't realize happens before the scoring process. The companies that survive the first three screens that we talked about are then sorted in descending order, so largest to smallest, by their trailing 12-month dividend yield. Only the top 50% of companies with the highest yields move on. And then it racks and stacks the companies equally by the following four categories: free cash flow to total debt, return on equity, dividend yield, and the 5-year dividend growth rate. Individual securities are capped at 4%, and any one sector is capped at 25%. This is a great management rule to make sure that no one company or sector gets a disproportionately large slice of the pie. And then rebalancing is conducted on a quarterly basis to get some of the runaways back down to 4%. The index composition is reviewed annually to add or drop companies. And the 2025 reconstitution is right around the corner. It happens on the third Friday of every March. SCHD has my favorite dividend ETF methodology that I've come across. Many of the other main dividend ETFs simply screen for one or two things and grab many more companies. SCHD focuses on high quality companies along with the dividend growth angle. Enough of the basics. You know what time it is. Let's nerd. SCHD Key Metrics. Let me show you why SCHD is the best dividend growth ETF out there. We've pulled up SCHD out here on Seeking Alpha, And we'll start out here on the summary tab. And the first thing I like to look at is the expense ratio. And you can see that SCHD has a razor thin 6 basis points of an expense ratio. Keep that money in your pockets. And then the other big one from this section is assets under management. And I would argue that $69 billion of assets under management is very nice and very stable. And then I scrolled way down to fund profile. And the thing that matters here is that SCHD is passively managed. You can see that it seeks to track the performance of the Dow Jones US Dividend 100 Index, which we went over the methodology already, but it is a passive fund that is not based on someone's gut decisions. Now we're out here on the holdings breakdown. We mentioned earlier it can't have any sector over 25% as the hard cap. And you can see here the highest one is financials at just over 18%. You have healthcare at 17, consumer defensive at 14, energy at 12, and industrials at 11, tech at 11, and consumer cyclical at 11. So it's a very balanced fund that isn't dominated by any one sector. And when we scroll to the top 10 holdings here, you can see these are all household names. And you can also see that none of them are above 5%. We do have 6 of these companies above 4% because remember, it's rebalanced on a quarterly basis. And depending on performance, we will have some run-ups. And it's good to capture gains, but ultimately they never get too out of control. And you can see that the top 10 companies make up 42% of the fund. Nothing too alarming there. And there are 102 holdings. All right. We got to what makes SCHD shine, the dividends tab. So starting on the dividend scorecard here, you can see that its overall dividend grade's an A+, and for good reason. It has a nice starting yield of 3.5%, and its trailing 12-month dividend growth rate was 12.2%. I think that's a little better than most of our raises last year. I don't know about you. The 3-year annualized dividend growth rate is nearly 10%. And if we thought that was fluky, the 5-year is 11.6%, and the 10-year is 11%. Think about that. I just want to show you how crazy this 11% dividend growth rate is. So I busted out the old calculator as a nerdy accountant, and I'm pushing my glasses up right now. I don't wear glasses, but it felt right to say that. And if you look, the rule of 72 shows that 72 divided by the average annualized return, which in this case is 11.4% over 10 years, so it's not a fluky sample size, shows that every 6.5 years, your dividend will double. In other words, if you just invested and let it sit and you didn't reinvest your dividends, you went out and you spent them and had fun, in 6.5 years, you officially are doubling your cash flow. If you had $1,000 coming a month, you now have $2,000. It's crazy. And we can see here that there are 13 consecutive years of paying dividends, and that's every year it's existed. And more impressively, 13 consecutive years of dividend growth. Great context and all, but it's time to leave the rat race. Retire with SCHD, Year 12. In this series, we put together a retirement scenario using 100% SCHD. Now, we would likely sprinkle in some other cash flowing assets for a typical retirement portfolio. But I really want to show how powerful the combination of dividend yield and dividend growth can be. SCHD has this 1-2 punch, plus a very stable portfolio value. To the point where I wouldn't call you crazy if your portfolio really was 100% SCHD in retirement. We'll first look at my ETF tracking spreadsheet to see why I selected SCHD over the other major players. And then we'll add another year to the Retire with SCHD spreadsheet that I started a few years back. I'm out here on my ETF Comparer tool, and this one is available for free to anyone. There's a link in the description below. You can see I last updated this on 2/19/25. So these are my 4 favorite dividend growth options overall, and they've all been around for at least 10 years. And I just wanted to explain why I choose SCHD before diving into the SCHD retirement model. You can see that all these funds, especially VIG, have incredible assets under management. VYM and VIG, both from Vanguard, both have more than SCHD, but they all have a nice healthy chunk of assets under management and they're not going anywhere. And you can see here that SCHD has the fewest holdings of these ETFs, and it's more heavily weighted on its top 10 holdings at 42%, but these are all pretty low compared to your typical ETFs out there. And you can see that the expense ratio is close enough to a four-way tie. We'll just call it a tie. We have technically VIG, just dropped recently, by the way, is a little better than SCHD and VYM, which are a tiny bit better than DGRO, but we're within 3 basis points, and who cares? Now, let's sort by these as we go here. We care about dividend yield, dividend growth rate, and total return. Those are the 3 key metrics that will matter long-term for our retirees of receiving enough cash and also having it grow over time and not being a dividend trap. So sorted here by yield, we can see that SCHD has a 3.55% yield, which is quite a bit higher than VYM, which is supposed to be a high yielder, at 2.6, and then DGRO and VIG are bringing it up the caboose here. And hopping over to the 5-year dividend growth rate, you can see SCHD is at a staggering 11.6%. So you combine that with the highest yield, and that's pretty incredible. Where VIG comes in second right now at 9.6 over DGRO at 8.3. These two are always battling back and forth, and really it depends on the length we're looking at. But VIG has the nod right now. And then I've never seen VYM not be the lowest in this pack at a measly 4.22%. It focuses more on just the steady eddies. So you would think something has to give here, and it does a little bit on the total return, but not much. You can see the 10-year total return, DGRO is the king, just ahead of VIG at 204 and 202 respectively. They both cracked the 200 mark. Now we all know SCHD has been struggling lately, but it's still at a solid 186% over the last 10 years. And then VYM bringing it up the caboose, but probably stronger than usual actually at 163. And just to get into a little more dividend depth, so after the most recent dividend, at the time you can see the yield was by far and away the highest for SCHD. Now these have changed a little with the market conditions. The quarter over quarter dividend was pretty weak for everything, but SCHD had a positive 6.9%, stuck it with a nice one there. DGRO was up 2% compared to last year's fourth quarter, and then VIG and VYM, yikes, were way down. And I just wanted to pull this up because we only looked at the 5-year, and we want to get some good balance in this. So just looking back at the trailing 12 months, and we saw this earlier, the SCHD is at 12.2%, way ahead of the competition. It's been a rough year for dividends for the market as a whole, but SCHD has shined. The second highest has been 5.33. Now the 3 years a little closer, but SCHD still has, a 1% lead over DGRO and a little more over VIG, and VYM is just gonna be bad at all these. It always is. Over the last 5 years, takes the lead and this is the one we saw earlier, so nothing new here. VIG did step its game up. And now on the 10-year dividend growth, we can only use the 9-year CAGR for DGRO because it just hit 10 years old, but it still doesn't have the full look back 10-year period. With using that, it's still 8.8%, so very solid, but behind SCHD pretty comfortably. Your average CAGR of those, 11.18 for SCHD, and the second, that's basically a tie there. DGRO just ahead. We'll just call it a tie of VIG at just under 8%, which is very solid. I'm sure most of us wish we had an 8% raise every year at work, which would double our salary every 9 years with the rule of 72. And VYM, at a always low 3.76. And this average does not take the quarter over quarter. It just takes these main CAGRs. And then for the dividend power, I just take the yield plus the average CAGR. And you can see SCHD, it just shines. That's just all there is to it. SCHD, my second favorite is DGRO, just because it has a much higher yield than VIG and it still competes on everything. And then I'd say VIG is third place for me, just overall liking, and VYM. So we found our champion. If you're gonna crown it, crown it. Let's move on. All right, now it's time to see how amazing SCHD has been in our retirement scenario that we started years ago. If you're new to this series, this couple retired with $500,000 at the end of 2012. So on 1/1/2013, when they rolled over those 401ks and all that good stuff, they put it all into SCHD. And now I have split adjusted this because we had a 3-for-1 split recently, but it's all the same exact numbers at the end of the day. That $500,000 bought a split adjusted 52,929 shares at a split adjusted price of $9.45 per share. And now On year one, this has drip off, by the way. Dividends are not being reinvested. They're taking these dividends and they're spending it and having fun and living the good life. So on 2013, their first year of retirement, and then 2012 is just here for the percentage increases and things like that. You can see their dividends only add up as of 2013. It's been 12 years worth of receiving dividends. And on that first year, the price of their holdings shot up quite a bit, so they were sitting on more value, and they also received $15,946 of dividends. And that was a 11.6% increase over last year. And you can see as the years go by, again, they're not adding any shares. These shares stay the same, no reinvestments. In 2014, they received $18,500 of dividends, and then $20,000 in 2015, went to $22,000, $24,000, and you can see the patterns here. It's growing all the way to $30,000 by 2019. Fast forward just a little bit to 21, and you're at $40,000 per year. And holy Moses, come down to 2024, that $15,900 has turned into $53,000 per year. And as you can see here in this column, it's 99 cents per share per year compared to what used to be 30 cents. So it's over tripled in 12 years. That's that rule of 72 just going wild, while being combined with the eighth wonder of the world, compound interest. And so these dividends are great and everything, and they've over tripled, and it's just amazing cash flow. But another cool thing to note here is that $500,000 without lifting a finger or reinvesting a penny has turned into $1.45 million. It's now worth $27.32 per share at the end of 2024, that is. And these are always the year-end prices here. So not only have you over tripled your dividend income, which crushes inflation, by the way. I mean, you can see these yearly raises, besides this one, just obliterate inflation. So you've made almost a cool $1 million of just price return in addition to $376,000 of dividends. Your total return has been $1.3 million. And I was going to say you got all this without lifting a finger, but no, scratch that. You got all this while having a blast in retirement and improving your life situation, your purchasing power, and buying more toys, going on more vacations, and doing whatever you want to do. And that, my friends, is the power of retiring on SCHD. On to the next section, which I added based on your feedback after the first Retire on SCHD video back in 2023. SCHD returns with drip on. We would typically have the dividend reinvestment option turned off in retirement because we need the cash flow to pay our bills. But here, by popular demand, is what it looks like just in case you have other assets to live on and you want to drip those SCHD dividends. All right, we're out here on Portfolio Visualizer, which is my favorite tool for backtesting asset allocations or specific scenarios like the one we're using now. And whoops, I'm going to change the name of this real time. So we have SCHD as our one and only holding. And you can see right here I put in SCHD for 100% of Portfolio 1. And real quick before we run this thing, I just want to show that we're starting at 2013. That's that first year of retirement. The end year is 2024, so that's 12 years of data. The initial amounts, that 500,000, we're not contributing any cash flows. Rebalancing doesn't matter because it's only one holding. And then we have reinvest dividends, yes, that's the point of this module. And display income, yes. Okay, and we can see that it pulled from January 2013 through the end of 2024, and that's what we wanted. I like to start on performance summary, and we're not comparing anything to anything else today, but it's just kind of fun to see that we started with $500,000 and our ending balance is $2.1 million. So that would be if you reinvested your dividends once again. That's an annualized CAGR of 12.76%. Standard deviation is very low at 14. The beta of SCHD is, I think, around 0.7 something percent, meaning the market itself is 1%, so it's less volatile than the market. And we'll get into some of that. Its best year was a staggering 33%, and this is the best stat of them all, its worst year on record is negative 5.5%. We can see here on the portfolio growth that we're pretty steady up from 2013. There's some dips, there's always gonna be like that. And this is a lot less extreme than something like VU and definitely something like QQQM or VGT or SCHG. But you can see here, like everything else in COVID, that was that big drawdown. You went from 1.25 million back down to 981. So that hurts a little, but the power of SCHD is it never lets it hurt you too much. And then you work your way up, you dump a little in 2022. That was a rough year, as most people know. And here we are, and we're dumping again lately. So it hasn't been the best couple years for SCHD, but you can still see that you trend up. You're over $2 million at this point. And remember, you haven't contributed anything. All you've done is reinvest your dividends. It's that simple. That's 500,000 turning into that. And this annual returns will really help us see the power of SCHD as a great bond replacement. You can see these triumphant years. They're always fun. 2013 was the best. 19 and 21 were both great. And then you have some pretty solid years, but that's just gravy. Where we really want to look is at the bad years. Flat in 15. In 2018, it was down 5.5%. And in 2022, when VU was down about 18% on total returns, and VGT and QQQ and other growths were down, most of them around 30% or just over 30%, SCHD was down 3%. It hasn't boosted from the ups as much as the market, to be fair. VU's been up 20+% in both of these years. So SCHD is a good portfolio stabilizer for wildly growing dividends that hold together the portfolio when things go south. I've said it before and I'll say it again, much better than bonds. And now we're to the trailing returns. And we'll be brief here. The full time period, that average of 12.76 annualized return is pretty incredible. And the last 10 years it's been 11%. In the last 5 years it's been 11%. These trail the market once again, but not by a ton when you zoom out and look at the full. It's still solid. In the last 3 years, that's where we've really struggled at still a positive 4%. And then last year it was up just under 12%. Again, these aren't gonna knock your socks off, but they're also giving you some pretty good growth. And in addition to that pretty good growth in quotes, the portfolio income is wild. In 2013, we had $16,100 when reinvesting the dividends. And now this is gonna step up a lot faster than my spreadsheet, which matches this with drip off. But when you have drip on, in 24, you're up to 19,000. Then you hop up to 21.5, 24.4. You're smoking inflation. 27K, 30K, 36,000, 44.5 in 2020. Remember, 2020 was a pretty bad market at times. Look at the income. You would never know it. 2021, 51,000. 2022, the general market's down about 20%. Guess what? Your cash flow went from 51K to 60,000. It's like you just slept comfortably the entire time. 2023, 64.5, and 2024, you're at $75,000 of dividends a year. Now, of course, you have more shares in this scenario because you're reinvesting, but remember, no new contributions. It really does add up like this. 2024 gave us a hefty 12.2% raise, and who knows what 2025 will bring. We do know that our cash flow will likely keep growing because SCHD has never failed to raise its dividends year over year. And that streak recently hit 13 years. I'll see all of you SCHD holders again next year to celebrate another year of juicy cash flows. Check out one of these two videos if you want to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you here in the next one. Peace.